Hi, this is Sai Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the forexbsummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexbsummit.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So in general, downside performance that we discussed recently has been completed, or at least has happened. This gold market shows the tighter relation to the interest rates compared to the forex market, for example. Well, it falls more or less in a tendency that shows the interest rate market. So this stands mostly in a row with the things that we see on the 10-year yield. So discussed already this pattern. This is actually most clear pattern among all other markets right now. So with this upward action, gold market also has shown downside continuation. At the same time, take a look here, guys. Market has not quite reached the harmonic target, so it should be approximately around 295, somewhere around this area. So it means that interest rates could climb slightly higher. Besides, we have until the major statistics release couple of sessions, so it might be quite enough to complete and make this pattern absolutely harmonic. It means that here we can't exclude that gold could keep going slightly lower, although it's a bit stronger than on the forex market. But in the current situation, it's just the thing that we need to keep an eye on, because it also might be important to us, as we could get the better entry price with the further downside performance. At the same time, it could escape us from not necessary losses if we intend to take position too early. So we have to be careful. At the same time, we can't ignore the level where the market stands right now. So take a look. In fact, market has reached the predefined support that we already discussed recently. It's very good, strong area, which is the agreement and the confidence support, 1833.37 and OP. And it would be also the mistake if we totally ignore it and will not pay enough attention to the price action that might happen around this area. So what in particular talking about? So since market could go to the XOP based on the performance that we have on the 10-year yield, it's just we have discussed, right? We should be careful around this area. And it suggests that we're not ignoring it, but we demand for additional confirmation around this level. For example, take a look at the hourly chart. Market is going around, but we also could watch for a clear bullish reversal pattern that might be formed around this area. If on the hourly chart, maybe even on the 50-minute chart, we will get some clear bullish pattern, this might be formed here, we could try to use it and try and take the position around it. If no patterns will be formed, markets will just showing this type of action. Let's keep going lower. That just save us from not necessary position taking, and we start watching for 1880 area. So that's the major idea that we could get around this. If you're not sure with this, but you intend in general taking the long position, well, theoretically you could split your position and take the minor part right here. So for instance, 25-30% of your position you could take here and see what will happen. So with this downward action, you take the bulk around this area, and in this case your average will be somewhere slightly above this level, which is also will be acceptable if you're not sure in your skills with identifying with the patterns, making the correct decision in this difficult environment. Simultaneously, as I said, keep an eye on the 10-year yield as well. Once it starts moving to the 295, that will be the point. It will be very important. Just because failure of this pattern might be really bad sign for the gold, which means that gold hardly will show it in second leg of the upward bounce. It will mean that gold is also probably will be under pressure and keep going low. So as you can see, this pattern is very important for understanding of the performance of the gold market as well. So that's actually what I would like to talk about the gold market right now. Just be careful, use the common sense and follow the patterns that we have, particularly speaking on the interest rates. Here, as I said, also be careful and just watch for additional confirmation before you will take the long position, because strong level it is good, but it's not enough in the current environment. Is the 10-year might go higher.